The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. I had said to subscribers to my opening call, 115 is going to be very important. If the Dow is down minus 120, that's going to suggest that that arch formation we've been talking about is underway. Meantime, the strongest index is the IWM, out of the big ones, that is. It's down just 7 cents at 155.32. What is interesting about this is that it's made another new leg up, but all within a very contained area. The weekly chart still looks pretty negative. Let me just move that over. And I was asked about the 120-minute chart right here. Could this be a single leg 8 to the upside? And I said yes, it could be. But it needs to close under 153 and at 155.38, and it needs to do that fairly soon. Otherwise, there's a chance. See, there's a rotational market going on, a bifurcated market, and you'll see exactly what I mean when I go through these one at a time. So let's get out of this, and I'll show you something very interesting. The Dow, INDU, the Dow at this particular point is down 278. It's in the pattern. Let me just do this. I'll show you what I show my subscribers every day. Here's the daily chart, and I do that in two frames. Reason being, I want to be able to show it one where it's kind of just independent with just the bar chart, a couple of trend lines, couple of arches or cups formations. And in this particular instance here, you can see I've got the same thing on the right, but now I've got the MACD, which is just slightly positive, and the stochastics kind of negative at 73%. Had a good rally, but it really didn't. It should have been up in the 83% area, and now it's at 73%. That's not a good sign. I'm suspecting that we've made we are confirmed already in a Chapman wave sell mode in the daily and a sell mode in the weekly charts. A lot's going to happen to change that. So now you can see what I'm talking about. The Dow's down 1.14%. It's really important over the next 3 days that the 24,217 low of 4 days ago is held. And if there's going to be a rally, that rally needed to go above 24,860. That's the 9-period exponential moving average. Not good enough, really. It needs to start a new leg to the upside above the high that was made yesterday, and that would be at 24,995. So what we're really looking at here is in the Chapman Wave 5, we've made a 5 on the upside at 25,800. We're in leg 2 to the upside, started leg 3, but leg 3 only doesn't really kick in until below 25,217. This is a really important moment, and the reason being that when I look at weekly charts, they are not showing very good signs in the S&P and the Dow of movement to the upside. And if you look at the 120-minute chart right here, the 120-minute chart is showing, I actually made a mistake. The daily chart, the MACD is still negative, and the stochastics very weak, on-balance volumes turning down. This is not a very good technical picture, and the first real support in the daily chart coming up is at 24,450. That's 130 points lower. Could still do that today, let me tell you. Now we'll go to the 120-minute chart, and I'll show you the 120-minute chart. Well, I can't see it making the 5 in the Chapman wave. This is going to be a B- probably as the arch formation kicks in, and I'll know that. We're already testing yesterday's low, the low bar of this morning of 24,571. We've just gone to 24,565. So this is continuing down. Not a good sign. I must tell you, I'm kind of I'm very cautious about this market. We haven't yet seen the high techs and the techs turn down. We'll get to that as we're looking through these different indices. So that's the Dow. The only way the upside is going to be really positive if there's breaking the 25,000 area by Friday. I just don't know how that's going to happen. Now the S&P, SPX is very much like the Dow. As I'm about to go away from the Dow, look at the weekly chart. You've got that lower H pattern that's forming from the 26,000s high down to the 23,300s low and the 25,800 rebound, and now you're starting on your way down. And that tells me that that monthly chart, that Chapman wave Roman candle that we're going to see here in the Dow, we're going to see it now in the S&P. Look here in the S&P. Same pattern. Chapman wave Roman candle right there. If the S&P at any point this week goes below 2651 and then closes the week below 2650, that's going to be a big negative. It's going to suggest that we're going down to the low. Residual low goes to an internal low. And you'll see the same pattern with the H formation in the S&P weekly chart. And the S&P daily chart has very weak technicals, and it's trading down 25 at 27.02. My suggestion to you is be very, very carefully on the long side, unless there's specific areas, but at 27.68, 27.02 is where we are. At 26.95, we could even accelerate much lower. It has to go by Thursday. You've got to see the S&P up in the 27.35s. I'm not sure what's going to take it there. All right, so negative sell mode in the daily chart of the S&P, sell mode in the weekly chart because of the close below the 9-period moving average on Friday. It has to prove itself to me to change that status. Let's go to the QQQ because they've been very strong. Right now, they're down $1.44 at 167, but they're starting to make lower lows and lower highs. To me, 167.12 says the weekly chart's the one that we need to watch. If at any point, let's just say on Friday at 4 o'clock, the QQQ trades, instead of closing in the 167s where it's at now, you suddenly see it down to the 165.50 area. That's not going to be good. 164.39 is the 9-period exponential moving average. I suspect we're going to take that out. So the only way this is going to change is to get to 169.80 to 170.20 by Friday. That to me is going to be imperative. IWM we just did. IWM on the daily basis, holding within the context of this larger arch formation quite well. Parameters to watch. Trading at 157.70, I have to say, whoa. The rotational aspect is going to say that the IWM, the Russell 2000, could go higher. But let me tell you, if it goes under 154.70, that 153 area is going to be really key support to hold. Now let's go to gold. Gold was up earlier last night, then it started to pull back. It's down 9 now, 13.26. We're not in our long position at all in the golds. I don't like this. Yet the dollar, funnily enough, is it's kind of holding okay, but it really doesn't look very good. I have a theory going on with currencies, what's going to be happening, and with gold. I'll be right back. Basil Chapman, Dow's down 307, S&P's down 23. We'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 306, S&P's down 23. So the question in the den was, Basil, you think there will be lots of important moments in 2018? What I did say was that I believe that the tide has changed and that now the negative moments are going to have a negative effect, or actually any news is going to have a negative effect for at least a little while, whereas before every bit of news, regardless of what it was, just made the market go 300 points higher or more, 1,000 points higher. This has changed. And that's what I'm looking at. Now, let me just go through this. See the way the dollar is pulled back quite sharply? It's made an arch formation. There's a lowercase h. Then it's made an even bigger one, makes a lower low, and then makes an even bigger arch. Let's call this an engulfing candle. If you were looking at it, say, if all of this was just one weekly candle or a monthly candle, let's call that an engulfing candle that's given back almost half of its gain. And that's saying to me it's outlined the parameters of the 90 to 91 area as resistance and the 89.50 to maybe 88.70 area as a containment area. Until the dollar breaks decisively, I've been saying this for a long time, it hasn't done it, until the dollar breaks into the 91.70, 92.20 area. No, I've been saying until it breaks into the 90.70, 91.20 area and holds the closes in the upper range, I have to consider this as just a sideways trading formation. So that stays. What is important to me is that gold had an opportunity to take this kind of conflicted personnel era right now that we've got in the administration, especially with Cohen leaving. Although we should have known that there was a big conflict with Cohen, because all the things that are going on now with the trade it's not what he advocated. He advocated not for any tariffs. So this is very understandable. I've discussed this over a long period of time, and I've said that Trump wasn't a politician in the traditional sense that he came from Washington, essentially been there for 10, 20, or whatever years it is, so that he already had all his clique his core personnel kind of right there in the back of his mind, ready to use. He came from the world of business, and I suspect that he's always been a loner, that he's always kind of meted out favors to be able to keep in everybody's good books, so that he's already a chameleon in many ways. I used to think that Bill Clinton was the perfect chameleon. He could look, I know this for a fact, that he could be in a party with Democrats and Republicans. He could look the Democrat right in the eye with a Republican standing next to him and just say everything that the Democrat wanted to hear. And then he could, with the same person that he could look at and look at the Democrat and the Republican and say everything the Republican wanted to hear, and everybody's nodding away. He was a comedian. He was a perfect politician in many ways. So Trump is not a politician in that sense of the word, but he is a player. He is someone who wants to always try to stay in the game, and he'll do whatever it takes to stay in the game. That means that we are going through what would be in a private sector, just stuff that you'd never read about. Now you're reading about it all the time. So we've got to get used to that. So to answer the question in the den, yes, this is a period where the market is going to have some severe manipulations up and down. Manipulations, I shouldn't say that, triggers for moves up and down. But at this particular point, I'm suspecting that we're going to make lower highs and lower lows for a period to come. I'm not sure if it goes all the way from March into April, but I suspect we've got a couple of weeks still to go on the downside. I'm not saying we have to break down. The bifurcation is what's really important. Now let me explain what that means. It means that if the SMHs make a leg D and then go to a peak D, made a slightly higher high today at 109.90, just 23 cents away from yesterday's high. But if they start to reverse down now, that's going to be very serious. So when they start to turn down, XLK, I'll put a bunch of things in that category. XLK is the same thing. This is the S&P Select Tech ETF, made a D already at 69.71, started to struggle with the right shoulder failure. This is the H pattern, peak D in the monthly, in the weekly, only a C in the monthly. I really have to, it's the only one that's made the C. Even the NDX 100, not the Qs, but the NDX 100 has made that D. Look, finally we tracked it down, and it didn't make a D because you got a high of 5,995.77 in July of 2007, and then 5,995.45, 32 cents lower on a monthly basis, and that's that C. And that's what's missing in the QQQs. I'm going with the root, and I'm saying the QQs may be made C. I'm calling this a phantom peak C, so that we really are at a D. I want everything to line up. And that's a legitimate thing that you can do in the Chapman wave. Every once in a while, a monthly chart will have 146.21 and then 146.59, 30 cents in a monthly chart difference. But everything, I'm not fudging the rules. I'm using the rules. And this is what the rules say in the Chapman wave methodology, that you can use that, but you got to put it in red to say it's a phantom peak. For that phantom peak, you want to be conservative in your count because you want to get to D correctly. I don't want to be there at C expecting a D and then have a much sharper decline. Say, wow, what's going on? That looks like a D. Because in theoretical terms, that is taking the place, and that really is a D right now. Okay, so now we've got that. I want you to just go through, so the dollar trading band, I want you to go through high-grade copper. High-grade copper had a nice big bounce the other day. Now it's giving it all back. It's going back to negative. Wood, which is the, this is the ETF, Timber and Forestry Global iShares, acting poorly. It did make that D finally. Whoops. It went to 77.89. 77.87. So it's a peak C1, C2, or it's a G, whatever it is. It looks to me like that. At least it's a short-term top. So all the little duckies are in order to say, if the rotation continues, then some of the sectors might hold up way better. Security, robots, etc. They might hold up better. But in the meantime, some of the sectors that have had spectacular moves, like a Home Depot, look at this, down again today, down 385 at 177, made a peak F. There's that lowercase h pattern, the weekly chart. A G, I'm calling it a G for now. In the monthly, I'll make a decision whether it's a G or a B, because I don't know if it's going to go below 119, 120, 119.20 from November to really negate this. I think this is going to be probably a B in the end. But in the meantime, that's a monthly. There's the H pattern in the daily. Watch out below. If it starts to take out 175 support, it's at 177.80 right now. I'll be right back. Basil Chapman, got a lot of questions. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I was asked about silver. I thought I'd done silver, but I didn't. It's down it's a 16.50, down 28 cents. You know, it had a potential to make, I don't want to take time, it's not a technical Friday. This let's call it a rectangle formation that's formed between the 17.04 area and the 16.20 area. It had a chance to just nick the low side of the candle that was made on the 9th of February at 16.19. It went to 16.16 on the 1st of March, and now it's had a nice bounce right up until last night. And then it gives it all back. But not all, but a chunk back. And that's a pity, because if it showed any sign of going over 17.04, I would have said, wow, finally silver is going with gold. It's getting, I don't like this. I think there's a problem here. And this was the opportunity at this, between Monday and last night, gold had the opportunity to say, I'm back in play. I'm moving higher. The GLD trading at 125s right now. 125 should be at 120, or should be at 131. And it just couldn't get any traction at all. Look, here it is. It's in fact making lower lows and lower highs. The GLD at 125.71 should have been above 127 to start another leg C to the upside. Instead, it's down. And the silver SLV is the same sort of thing. It's actually a little bit better looking chart, but it just doesn't give any traction to the upside. It can't hold. So unless silver, the SLV trading at 15.53 down 25 cents, can actually start to close above the 200-period moving average at 15.94, close in the 16s, I just have to look at this and say, wow, chop, chop, chop. So that's what I'm looking at there. And you now got high-grade copper pulling back. So I'm a little kind of conservative about that. You know, it's very interesting. Yes, there could be an island top if there's a sudden gap into the 16s, but because whenever you're looking at any instrument that trades overseas first, you're always going to get these gaps, island gaps, etc. So there's a little mini gap right now. It's gone back inside. So I don't take them as seriously as when you see something that trades only between the hours of 9:30 and 4 o'clock. But yeah, that would be an island gap. So let's just keep an eye on that. And those are the parameters that I'd be watching. Crude oil had a spectacular rally and then a spectacular failure, down again. So the commodities are actually not acting all that well. No, I should say the commodities we're looking at right now. I haven't looked at the grains, but we're going to be watching this very closely, because within the context of the patterns, you've got crude oil making that H pattern in the weekly chart. And you know what? It hasn't helped. So this is interesting. The XAL, the airline index, look, it's got the same darn pattern as crude oil. It should be doing the opposite. It should have a mirror image. So even that, at down 28 cents today at 106.71, not a big deal, but it's a big deal that it's not up quite sharply since crude oil is pulling back. So I've gone through those. Now, I had a couple of, this is a good statement made to me that if on Friday the jobs report is softer than expected, and if there's a chance that Trump talks against tariffs, say for Mexico, maybe Canada, market could rip higher. I don't want to see it. I just think that the market's tied technically. Let it rip higher. It can go anywhere it wants. I don't care. I just want to follow it. And right now, I'm saying I don't see anything very positive about our key indices. I am seeing the Qs acting pretty darn well, getting a little tight. I see the semis very close to turning down. How much, I'm not sure. So these are the things I'm looking at. Now, this is going to be very interesting. I was asked about race. Race is Ferrari. Race went to a peak E in a V-shaped pattern. I'm calling this just a B in the weekly chart, and that's kind of positive still. So this is for the very wealthy, the Ferrari buyers. I'm just watching it. I put it on here. It's really not telling me much about the auto industry. This is telling me about my socioeconomic aspect. Leg C in the monthly chart. I'm calling it a B for now. It could be a failure. I'd have to rename it. I could rename it. It doesn't work out all that well. If this is a Chapman Wave instant restart, I've seen a lot of these with a very tiny little peak D, and within a bar, actually usually it's within 2 bars, it makes a new high and keeps moving higher. This, in fact, would be A at E, B, C, D, E, F. That would be the alternate count. I don't want to go into that right now. I'm just using it for a different reason. So Ferrari trading at 123.63, up 88 cents, having a good day off the line. I'll just keep an eye on that. SQ, we've a lot of people that are subscribers and a lot of folks in the den keep asking me about SQ, which is Square Inc. Up $1.31 today in leg E and 50.96. See, until these residual areas start to show me that they're making tops. I don't want to go too heavy to the short side. I'm just saying consolidation underway. I'm still calling this a leg C in the weekly, leg E in the daily, E in the monthly, squaring, point of sale software to manage receipts. I'm just hearing so many positive things about this. These are the little devices that you see people attach to their iPads or their cell phones to do their sales when you're at, say, a flea market or something like that. So these are the portable transmission of the funds, and it's fantastic. From what I hear, it really, I'm sure the others as well. I'm looking at SQ. Chart looks great. I would say that even if this pullback is at 50.96 right now, there's tremendous support in the 46s and then the 44 to 42 area. So I do like this. Is one we almost went long, and I didn't, and by the time I wanted to, it had gotten away. We've had a number of stocks like that. What can I say? It happens. Next question I had was, would I look at Boeing, UTX, LMT? Yeah, so Boeing was last night down 14 points. Now it's down 5 at 343.62. We are short. We're short from the 353 area, just above 353. It's trading now 343. Big deal. Doesn't mean a thing until I see Boeing, because I think Boeing's telling us about the market. This is the traditional side of the market, like the Dow, cyclicals, the really big cap stocks, the heavies, and it's got a D in the weekly chart. It has to. I have to wait till Friday officially before I can call it a peak D at 371.60, and it's a leg E in the monthly. And I'm suggesting to you that Boeing's going to at least give us a lot of clues, because if by Friday it's trading closer to 330 than to 350, that's silly to say. If this is closer to the 350 9-period exponential moving average rather than below 335, I'm saying to you that it could go sideways in an H that goes to an M pattern. If it closes below 335, this thing's going quite a bit lower for the first time in a long, long time. Next question I had was, so Bob wants to know about JP Morgan. JP Morgan trading down. Yeah, that H pattern goes to a peak at 119.33 in the 27, trading now at 113. I think it's going lower in the shorter term, maybe even intermediate term. I'll be back. Basil Chapman, down 300.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just answer this question first. Do I have a target TGT trading at 71.29 down 50 cents? Monthly chart, does it have a Chapman wave falling axe formation? Yes, it says that at some point, if target is able, I'm not sure, I think it has to pull back more closer to the 66s before it can do that. But if target at some point starts to trade, close 1 month, doesn't even have to be more than 1 month. It mustn't just hit it, has to close above 80. The moment it closes above 80, I'm looking at the left side high of 84.14 from April of 2016. If at any point in the next month and a half, going into mid-April, it closes under 66s, the 66.77 level is the 9-period moving average, that's going to be very negative. Then it's making an arch rather than a falling axe formation. Monthly chart says don't get carried away, just trading in a trading band, and the 68, is it? The 68 is very good support and a strong resistance in the 74s. We'll see how that works out. Then I had a question about, let me go through these one. LRCX, which is Lamb Research. Fabulous leg D, but it's a gray D, even though it's a blue D because it's gone to an actual D. It is under the major high that was made on the 25th of January of 218.48. It's trading right now at 209.35. MACD is very strong. Stochastic's very good at 90%. On-balance volume is good. Weekly chart is really struggling. It could turn cross positive. These are the stocks that I'm watching. Applied Material. So the answer is yes, it's acting very well. The answer to where it's going is that I'm suspecting that the semiconductors are going to be pulling back at least a little bit sideways over the next 3 to 5 sessions. And LRCX, Lamb Research, and Applied Material, those are the clue stocks. These are the stocks. Applied Materials making a potential peak. D today at an all-time high, almost an all-time high, failed under the 60.89 level of the week of the 17th of November. But let's face it, 60.89, and yesterday it goes to 60.18, 75 cents or something like that away from the all-time high. This is still pretty darn good action. MACD is good, Stochastic is good, and until I really get a major, I tried today, I'm not going to do it again until I get much more confirmation, until I get a really good signal in the semiconductor key stocks that they're turning down. There's your strength. This is the bifurcated market. Home Depot, no good. Target, no good. Go to the semis, go to the chips, and you're looking at real nice strength there. So until they pull back, you got to be a little bit careful about getting a little too enthusiastic about the overall short side. Now, a question I had was, where did it go? GBTC. So I'm pretty sure I did this yesterday because it was on my mind from early in the morning, was that I wanted to show, where did the darn thing go? There it is. I wanted to show this pattern and say that, look, be careful. I think the stock market is making this H pattern, and I think that Bitcoin is as well. And yesterday we were just a little bit down like that. And I was going to say double top formation at a peak B, a great peak B, with a failure to make a new high. Watch out, because this is looking quite weak. So now we're down at 9805 on, this is the Bitcoin, BTC USD, and this pattern is saying to me, if it takes out the low that was made right there of 9280, yep, 9280 on, I don't even say, February the 24th. If it takes that out, it could go quite a bit lower. So just be real careful. If you look at GBTC, which is the Bitcoin, actually I should say it's the Bitcoin Investment Trust, it's a fund, that's saying, oh, be real careful. That's what I've been saying. There was just that chance that there was a move up, but you had to raise your stop. By now you should be out from that little trade that I was saying for one of our callers in, and I think it was someone who sent an email. And then I said, just got to be real careful, and it's hard to put in a stop. So I've said to subscribers, I don't really want to do anything yet in my subscription series, in my opening call. I just don't see the benefit yet of having a position that I feel is strong enough to say we're going up for 5 weeks. This is just a bounce, and now we're coming back to test. There's that H pattern. We're looking at it everywhere. So just be aware that certain patterns repeat and they have certain connotations. So the next question I had was, can you please draw a downtrend line? So what I've done here is, see this, how can I do this? What I would normally do is I'd say there's a Chapman inside track, repellent zone. It's under it. So 12.43 on GBTC would be the 200-period exponential moving average support that had better hold. It's going quite a bit lower. And that's on the daily basis. So I hope that helps. Next thing I want you to do is question about, so JP Morgan, that's what I was looking at. JP Morgan had, is trading at 113.36, down $1.80. Weekly chart starting to turn down. I'm going to wait for Friday, but so far the MACD's crossed negative. We'll see what happens by Friday. Relative strength this week, on balance volume is weak, and the stochastic is at 82%. It's above 80%, so it's holding okay. This is going to be important because I think that the XLF is going to be under pressure, but I think it's going to actually hold quite well. There's that H pattern. So if I'm looking at rates, did I get to rates? No, I forgot to get to the rates. The TLT is up 29 cents at 118.43. I think that the rates are in a sideways move for the moment, with the 30-year, the TYX, let me just show it to you here, with the TYX yield, in a peak C in the weekly chart with very good technicals. The MACD and stochastic are very good, and the monthly chart has gone to a leg B. That could fail because it's the first big move it's had like this. Why is it taking its time there? So the daily chart, there it is. So I haven't got this. I should have had notated. CD recycles A, B, C, D. This is a peak E in the daily. So there's that H pattern that could turn out, but it's holding very well so far. Price is the arbiter of a trend. The technicals are weak, but the price is holding on the 9-period exponential moving average. So I'm looking at the TYX, which is the 30-year yield, and I'm saying that as I can see it, there is a sideways consolidation going, and until 30.70, is at 31.36 right now, somewhere around the 30.70, 3.07 level is pierced. I think it's just sideways because I think the weekly chart is still going to make a higher high above 32.21, 3.21 that was made 3 weeks ago. So that's my look at the TLT. I think we've covered just about everything there. Oh, USD JPY, USD, I think I did that. USD JPY. No, I did it early this morning. Trying to come off the low that was just made. It's at 105.90. As I say, I don't see anything that is trading in the 108s. Boy, a break under 105 would be very negative. We'll see what happens. Dow's down 278 now. We've got one little final section to go. Oh, no, I had Victor calling. I just didn't see. Sorry. I was looking left instead of right. Victor wants to look at T. We'll look at telephone in a moment.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Let me just do this. I've got telephone, 36.74 down 13 cents. I've got Verizon at 48.79. Down 10 cents. I've got Exxon at down 2 at a new low, and I've got Chevron. And now I'm going to go to Victor. I wanted to do that as a lead-in. Victor, sorry you had to wait. How are you?
Good. I just been playing it. It's like ping pong, but eventually it's going to bust because it's going through the 13-day average, the 20-day, and the 50 and the 250. What do you think? What is it forming? Because the worst that happens, I get stuck with it. That's how I look at it. It pays a good dividend, but it's going to do something.
Victor, you're talking about telephone, T, right? Yeah. So
the letter T. Yeah, it's doing the same thing Verizon's doing, but whatever. You know what I mean? I just play for the bounce and get the dividend or whatever.
I've looked at telephone, Verizon, Exxon, and Chevron for some time now because I really would like to put something in my newsletter for those people who want some safety in a dividend stock. I don't see that. Even in my services that I get right now, I'm thinking of consolidating. I'll save hundreds a month, not just a year, but hundreds a month if I did that. I think a lot of people are looking at these different services. So I'm looking at the communications area as vulnerable to some really big surprises. Google could come along. A whole bunch of people could come along to change the format of internet activity. So I'm looking at telephone, and I don't see anything other than a rectangle formation. I think there's a better chance that it breaks to the downside below 35 instead of 36.73. Actually, let's say
it hit 35 2 weeks ago on February 9th
and
when you had that big down day.
An arch formation and retest that. So I'm kind of nervous about these stocks. I'd actually avoid them because I think they are just these sudden news events that really take them down rather than push them higher. And when they do go higher, they can't hold. So I don't see it.
For you to get nervous, this must be serious, right?
Well, it's not that I'm nervous. I'm just nervous that the industry, I think, is under attack from their own. Everyone's having a,
I think the whole market. I think the whole market's under attack. We're on 8 years since March 9th. I think once the government gets out of buying the stocks every morning, you're going to have a crash, and that's when we buy.
That's a separate thing. I'm just looking at telephone. I think telephone's a little bit more vulnerable, so I'd be careful. Yeah.
Thank you.
Thank you for calling, Victor. I hope that helped you. So that's Victor, and folks, Dow's down 267.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.